Hello and welcome to this Markets Today special with Sunil Singhania of Abakkus, one of the most successful PMS fund managers in India. Sunil, great to see you again, and it's a good time to speak to you because markets have bounced back and within striking distance of all-time highs. What do you think has caused this flourishing out of relief in the market? Is it because some of the global headwinds have receded, or do you think there is greater confidence in the earnings story now?
So I think Udayan, 22 obviously was a very challenging year, and the first quarter we started with optimism, and then you had the Silicon Valley Bank and some of the other banks going belly up, and on top of it we had this whole concern about the debt ceiling. I think as we move forward, second half, according to us, is going to be pretty decent in terms of positive news flow. One is inflation is surely out of the way. We have already seen the peak. And just by base effect, I think the second half, starting June itself, we'll start to see inflation surprise positively with the headline numbers coming in much lower. And the same trajectory would therefore be repeated on the interest rate side. And I think now with the debt ceiling also issue at least temporarily behind us, I think the risk off which we were seeing is now back to risk on. Technology companies, particularly the large tech, have seen a big rebound. And I think generally investors are now getting more confident that the second half of 23 should be much better for the global economy than what we have seen over the last 18 months. So I think it's a combination of a lot of things. And obviously India has benefited out of it. We have seen flows, come back in a vengeance. I think May will be almost a $5 billion positive FII flows after a long, long time. And again, our indication with speaking to a lot of global allocators is one of optimism as far as flows into India is concerned.
Do you sense the same confidence in the HNI fraternity in India though, Sunil? Because while SIPs continue, it seems like there is some hesitancy which has come in. If you look at the number of accounts or how HNIs have approached the market over the last few weeks as the markets moved higher, it seems like they are not quite as confident as the FIIs who've come back in a big way. But do you get that sense, A, and B, what could be the reason behind it?
So on a lighter note, I think the smart, large HNIs and family offices have too much knowledge maybe. And the fact is that news flow is now very aggressive. Advent of media and social media and over analysis of everything has led to time and again concerns being raised. So after one concern goes away, you have the second concern, the third concern, and so on and so forth. And I think as a result of which there has been a little bit of caution. You're right on the large investors fraternity. Also, to be fair to them, last 18 months we have not seen any returns as far as the headline indices are concerned in India. And I think that is also playing, when you see the last 1 year returns being flat or negative, I think you don't get too enthused. That seems to be changing now. I think what we are already seeing is there is eagerness to invest. The only thing everyone is waiting for is the right time. And it's a very, very difficult thing to do, to time it to perfection. But our indications is that family offices have started warming up, and particularly the smart money has already started to move in. We saw that when we got an opportunity in March, when the markets fell, there was a move from the smarter investors to come into the equity markets in India, and I think that has continued. We ourselves closed one fund where we raised almost $200 million from Indian family offices. So there is reasonable appetite.
And what would you say are the risks of the market going back and retesting the March lows again sometime during the course of this year? Because when we went to the March lows, there was a lot of talk about the Nifty going down to 15,000 levels. That did not happen. Markets always surprise. We know that. But if you were to assess those risks at this point, how high would you say is the probability of the market going back to those lows again this year?
So then we have seen markets for a long, long time. I think earlier what used to happen is that a 15% move in the market used to happen maybe once in 2-3 years. I think now this 10-15% move in the markets are going to happen 2-3 times a year. Because, one is there is definitely uncertainty all across, whether it is economy or geopolitical related. And second is, all of us have the same news at the same time, and therefore we want to act in the same direction at the same time. And therefore, it is very normal to expect a 10% move up and down, quite frequently. Having said that, in the near term, I think, as I said, the second half of 23 looks to be pretty decent. As far as India is concerned, we have seen earnings season being pretty decent. And as we move forward, the impact of lower raw material costs, lower energy costs, lower freight costs, and also slightly higher demand should come into play. Hopefully, interest rates in India should also come off. The 10-year yields have already come below 7%. And I think if that does happen towards the second half of the financial year 24, then you might see, consumer demand also pick up. And on the government finances with oil at $72 and $75, I think we are in a good situation even as far as government finances are concerned. So when you move to 2024 and we have the election in front of us, I think it's normally preceded by higher spending as far as the economy is concerned. So, even that is good for the market. So I think things look pretty decent. But as far as the concerns are concerned, yes, if oil were to sharply move up, which looks to be a low probability, I think that would be a concern. In the run up to the election, there will always be some question mark over, whether the incumbent government is going to be re-elected, not elected, what is the equation, and so on and so forth. At this point of time, it looks to be pretty safe, but you never can know. And I think the third thing is the looming concern of China aggression towards Taiwan or other neighboring countries is always going to be there. And we all know the ambitions which China has. It's a long shot, but that again is something which is going to be a cause of worry, but a very, very, I would say, a 8-10 sigma kind of an event. So on the visible front, there are more positives than negatives, but some of these geopolitical events can spring off all of a sudden. But other than that, I think we are in a pretty decent stage. The only one thing which we would like to caution is that momentum is a big part of the market. So you mentioned about March. From March to May, markets have moved up 10%, but there are so many stocks which have gone up like 30, 40, 50%. And I think those momentum plays always can reverse. So, though the markets might not fall significantly, there is always a possibility of individual stocks giving up quite a lot of their recent gains.
All right. You mentioned the elections, Sunil. At some point as we get towards winter, I think it will become more and more of an issue, at least a talking point for the market. How do you see that affecting market performance over the next 12 months or so?
So traditionally in the run up to the elections, the markets tend to do well. This time should be no different. Obviously, the markets are going to debate what is going to happen, and obviously the one thing which the markets would love is continuity, and that seems to be also a big probability. But elections are elections; one doesn't know. So I think towards the end of the calendar year 23, which is when most probably the dates of the elections and all will start to be speculated of when it is going to happen, and all the permutations and combinations of who's going to align with whom will start to play in. I think there might be a little bit of nervous maybe for a couple of months till there is clarity. But, I think there is a reason to be more optimistic than pessimistic at this point of time.
What would be a good way to position the portfolio now? I mean, if your belief is that some of the risks have receded now and the global factors have settled, is it a good kind of a overall macro construct in which you start backing small caps and mid caps again over large caps because it seems a bit more of a stable situation for the market, or not quite?
So then last 3-4 years have been a yo-yo kind of years. We had one good year and then, we had two challenging years because of COVID. And then we are just coming up as far as recovery is concerned. And even this recovery has been full of, I would say, news flows which have been challenging, right from interest rates going up quite significantly and some large financial institutions like Credit Suisse and some regional banks in US going belly up. So it's not been a smooth last 4-5 years. I think the next 3-4-5 years look to be much more stable. And in that context, I think if India continues with the way it is doing and this whole focus on manufacturing and infrastructure development, and even this whole talk about 2047, which is 100 years of independence, India being targeted as a developed country. I think even if we go in that direction, I think the next 4 or 5 years can be really path breaking. If we have like 3, 4, 5 years of constant 7% plus GDP growth rate, then some of the sectors and some of the companies can really, really become much larger than what they are. So we are looking at it with a lot of optimism. Obviously, the whole focus is going to be on domestic economy and domestic related sectors, but India is also coming out quite visibly as a big beneficiary of the China plus one and the Euro plus one manufacturing, I would say, move. We have already seen large companies like Apple and Tesla indicate their intention of setting up manufacturing bases in India. And I would say that would be the catalyst which India needed to go really, really, fast in terms of their growth. I definitely do believe that next 5 years have the potential of India looking at growth like never before.
You've always been a fan of the manufacturing theme, Sunil, and you can find a lot of interesting mid caps and small caps as a portfolio manager, which can benefit from the manufacturing theme. So, could you tell me what are the best hunting grounds for you? I mean, because you could play manufacturing through various kinds of themes. Which are your favorite ones?
So, unfortunately, within this segment or this sector or this theme has been quite in the talk as far as market participants are concerned for the last 1.5 years, and not too many stocks are cheap. But having said that, I think manufacturing is benefiting from multiple reasons. One is, I mentioned to you, this whole move towards China plus one and Europe plus one. So exports, as and when the global economy revives, look decent. Right now, the global economy has been quite slow. So exports have not been that buoyant, but that will change. Second is obviously the raw material and the input costs are coming down, which should, help, I would say, the margin front. And I think overall, there is going to be, a scale benefit, which in some of these Indian companies get. So the advantage which India has is that it has a huge domestic market. And then, if exports do happen, that is, sort of a cherry on the cake. From our perspective, obviously the engineering side, we are quite optimistic. We are also optimistic on the traditional Indian, I would say, advantage sectors like IT services. We all know that Chat GPT and all are near-term threats, but India has global competitiveness as far as IT services is concerned. And then you have garments and chemicals and pharma, which again are strong points as far as Indian manufacturing is concerned. So all these can be, really good. Apart from the export side, I think, import substitution can be a big thing. So, electronics, we're already seeing how the EMS space is flourishing as far as markets are concerned. Stocks are just surging. And same is the case with defense. I think from our side, we like both the spaces, but in the near term, there is a little bit of over exuberance. So we'll wait for a cool off before we look at this. But as I said, India offers opportunities across sectors, and I think that is going to make investing quite interesting next few years.
What about manufacturers or manufacturing companies which are focused on the domestic opportunity, but not so much the export opportunity that you spoke about? Things like autos, auto ancillaries, maybe even consumer durables. Are you less optimistic on that leg of manufacturing?
So consumer durables, we are quite optimistic. I think, we saw a big surge in demand in 21-22. But, obviously, all of us bought more than what we needed at that point of time. And therefore, there has been a little bit of lull current year, which might last for maybe 3-6 months more. On the consumer durable side, weather has been sort of very erratic. And that's why fans and air condition sales and all have not been very stable. We have seen some pressure, but we continue to be quite optimistic on that space, and even building material, which would include, the likes of furniture and MDF and so on and so forth. On the auto space, we are not as constructive, not because there is not going to be enough demand, but I think this is a sector which is going to be open towards a threat of disruption. And Udayan, if you look at global scenario, I think the only company on the auto passenger vehicle side which has made decent wealth despite all its ups and downs has been Tesla. And we have seen companies like BMW and Mercedes and Stellantis, all global great companies trade at P multiples of 6, 7 times. I think in India, for similar growth, companies are trading at significantly higher P multiples. And the threat of disruption is for real because, when technology does change, it is predominantly new guys who come and take the market share. And therefore, our view on particularly the passenger side of auto is not that great.
Sunil, always a pleasure hearing your thoughts. Thank you very much for your time today.
Pleasure. Have a great day. Thank you.
If you like the video, do like, comment, share and subscribe.